Hey everyone, welcome to Triage. It's been a minute since I've made a video, and not gonna lie, with everything going on in the world, it's been difficult for me to want to try and, talk about something that I find fairly, trivial, like let's talk about interest rates or inflation. It's been really hard to come up with something relevant and something that's maybe useful. And on top of that, I struggle with ADHD, and getting things done with executive dysfunction is a challenge, but I'm putting together a great team who are helping me, and with this we can all be successful together. Today I decided we should talk about gas prices. Well, we know gas prices are up. That's no secret. I doubt any of you are watching this unaware that gas prices have gone up just absolutely crazy over the last couple of weeks, pretty much since I made the last video. Really, gas prices had been going up a fair amount, and then they really took off when all of the war problems started. Very unfortunate situation, absolutely tragic what's going on, and I don't want to minimize the severity of what's happening to the Ukrainian people at all, and I don't really want to get into politics. I have my opinions and you have your opinions, and we don't need to go there. That's perfectly fine, but we can talk about markets, numbers, gas, things that will affect us directly currently at the moment, and then later how this all plays in together. So right now there are two forces at play affecting our gas prices. One half of that equation is inflation, and the other half of that equation is commodities markets and how oil specifically is traded on the global stage. And each one of those is broken down into two other portions as well. So inflation can be broken down into supply and demand, but also currency debasement, because they're kind of two different forces that end up with kind of the same result. The global commodities markets, we can talk about how we kind of think about how things work, but it's kind of the old way of how things used to work, and then how things actually work now, and why banning Russian oil exports affects our gas prices so much when we use so little of it. So I will explain all of that coming up. First, let's talk about price inflation, supply and demand specifically. And what we need to know is the supply shock with oil, crude oil production and refinement into gasoline specifically. It all started with the lockdowns in 2020. As you can see, based on supply and demand went basically to zero as the world locked down, and specifically America and Australia and Europe. This is the price of crude oil. Zero is at the top 2/3 of the page, and as you can see, the price of oil actually went negative. Now, I don't know if anyone was actually paid to take a barrel of oil, but that's about what it equated to. And this was a relatively short-lived fact, and man, I wish I had bought oil when it was about zero. The problem is this demand and supply imbalance that we have. So a lot of times we think of production as something that can be turned on or turned off. And unfortunately, crude oil refinement and gasoline production, none of that is actually translatable. This stuff takes a very long time. What we're looking at with this top chart here is yellow is the demand, the yellow line is the demand, and you can see that drops off and then picks back up. And it almost drops off and picks back up before supply has a chance to react to it, because the life cycle of crude oil is so long and slow that it took almost the entire time that the demand had fallen off just to shut down supply to try and meet the lack of demand. As you can imagine, turning that supply back on also takes a lot of time. And honestly, the demand has risen back to where it was and has kept going to the point where supply is trying to catch up. So we have this kind of like permanent systemic deficit of crude oil products that we need, and has not caught back up to the demand side. We just can't make it fast enough. The reason that gas prices have been going up prior to Russia invading Ukraine is the combination of the supply not being able to catch up to demand, but also with supply chain problems, the inability to move that supply efficiently. The other part of inflation is in fact currency debasement. So we can think of the supply and demand as price inflation, whereas currency debasement or money printing is monetary inflation. Now, this is a chart where you can see that in about the start of 1900, a reverse inflation chart would have $1 equal to about $26.14. And over the last 120 years, that has declined to what now is $1. Currency units, for us dollars, are also governed and impacted heavily by supply and demand. You might be surprised to learn that in 2020, the US government printed as much dollars as had been printed from 1776 to 1979. So let me say that again. In 2020, the government printed as much money had previously existed in the last 200 years. Yeah, that's crazy. You can see, if you can see the chart, if you're not just listening to this, the chart starts going up very slowly and then has this massive spike in 2020. The M1 money supply is the chart from the Fed database at St. Louis Fed. As you can see, the money supply has just gone absolutely parabolic. It looks like a hockey stick. The more currency units that exist, or the more dollars, the less valuable the currency units are, supply and demand. The easier something is to get, the less demand there is because everyone already has it. So as the dollar supply increases, the value of the dollar decreases. This chart, what we're looking at here, is a side-by-side chart of Consumer Price Index, which is the measure of inflation, alongside the M2 money supply, which is a little bit different from the M1, but suffice it to say the M2 money supply is basically all the money that you and me have in the banking system, and all of the people in America have in the banking system. As you can see, the money supply and the Consumer Price Index, or inflation, tracks pretty closely to each other. They have a pretty good relationship there. Now, you can see also the M2 money supply spikes in 2020 when we've started all of that printing and have continued to do so, all of this money printing. And the price index on this chart hasn't quite caught up to that yet, but we're seeing record inflation now, so we would expect to see that the Consumer Price Index will continue to match the money supply as it increases. So that means inflation will keep going up as we have more money created. Fun thing to note here, I can't get current data on the M2 money supply because the Federal Reserve discontinued the M2 money supply measurement. They didn't want people to see how much money was being printed anymore, so they just said, we're not going to follow this anymore. The price of gasoline, we know, has been increasing, and we know that the overall inflation rate has been like 5, 6, 7, 8% now, 7.9% technically. But specifically, drilling down into the details, gasoline prices were 49.6% higher than gas prices were in 2020. So we have a 50% change year over year. 2022, we've only had 2 months measured. The March data will come out in April, but for right now, we're at 38% for gas price inflation for just the first 2 months. So that means after gas prices had moved up 50% in 2021, gas prices for 2022 have moved up another 38% on top of that. It might not be apparent looking at the chart, but this is percent change. And so it looks like 38% is a lower bar than the 50%, but they are not subsequent, they're cumulative. That pretty much covers it for the supply and demand and the currency debasement portion of inflation. So we have kind of both working against us. We have a supply deficit, we have supply chain problems, so we can't really move that supply around anyway, and we've been just doing a god-awful amount of money printing so that the dollar is worth less than it's pretty much ever been before. So it takes more dollars to get the gasoline that's harder to get and is more in demand. So that's why gas prices have gone up so much. The reason Russia has such an effect on the gas prices currently is because of how the markets work today. So the way we think of supply and demand is that we think that everyone's isolated. Like the United States will have a deal with Saudi Arabia to buy a certain amount, and then we have a deal with China to buy a certain amount, and a deal with Russia to buy a certain amount. And so this US supply of oil equals 100%. to the US, and we have all these independent deals bringing in enough oil to equal that 100%. And that was how global trade worked prior to World War II. What I mean is the US doesn't have enough suppliers to equal 100% of its oil supply. And then China has enough suppliers to equal 100% of its oil supply. That's not how this works anymore. Now what we do is we have global markets, and it's more of a global market. So if you imagine all of the world's oil supply gets put on eBay, and then all of the countries bid on the supplies of oil from eBay. That's essentially the global market. What this graphic shows you is that there are specific regions, and all of these regional producers put 80% of their oil onto this global market. And there's several other smaller markets, but suffice it to say, 80% of the world's traded oil gets its supply from the same place. So if you imagine eBay increases its fees, all of the sellers have to increase their fees to make the same profit. That's essentially what's happening with our oil supply. It's all being traded from one market as an aggregated pool of all of the oil supplies. So the US doesn't get its oil from, 10% China and 4% Russia and 10% Saudi Arabia. Not exactly. What we're doing is we're buying our oil from these markets, and these markets are supplied from regional suppliers. Here we have a chart of crude oil prices going alongside being marked with geopolitical and economic events. So as you can see, number 11 has a huge spike, and that's the global financial collapse in 2008. And then after it collapsed in 12, the supply was too high because there is less demand because no one could afford anything, and so they had to cut supply. So global events affect the price of oil because all of the oil is gathered up into one market essentially. So it doesn't matter who or what is creating a deficit in supply or too much surplus of supply. The result is the price moves for everybody. So again, the way it used to work was Uncle Sam would be like, hey Vlad, I need 3% of my total crude oil from you specifically. So including gas, 8% tops. Can you handle that? Jerk on a shelf. Vlad says, no problem. So we think that we have these independent deals and sourced from these specific locations. How it works now is that this is, as you can see, a pie chart of all of the producers. Ignore the numbers or old numbers, but the pie chart is the example that works. So the global supply of oil is now down Russia's portion of it. Russia, turns out, is the second largest producer of oil behind Saudi Arabia. So the US isn't missing 4% of its oil supply from Russia, and that's why gas prices are going up. And that's not what's happening. What happened was the global oil market is now missing 11% of its total supply, and we have to buy from that global market. So this is kind of the price of oil. As you can see, it started off in January at $75 for a barrel of oil, and it was peaking at $120 just last week. That's a 58.49% increase in the price of crude oil per barrel. That is why our gas prices have skyrocketed, because our supplier, the global market, has had a almost 60% increase in the cost of the goods. So that's what's happening with not just crude oil prices, but everything that Russia has exported over the last decade. Natural gas, wheat, all sorts of energy and food and commodities. Anything they've produced is traded on the global market, because the global market and the global trade has been the kind of the status quo for the last 30 years. And internet technology and everything that we have now for trading electronically has just solidified those connections even more than before. This is why the price of everything is going up, and it's going to keep going up, because oil prices and energy prices are directly correlated to how much it costs to produce food and other goods, and then transport those other goods to the market for you and me. So we're kind of stuck in this spiral, this upward spiral of everything costs more because everything costs more, so everything costs more. And we'll get into some more videos with some more specifics later. But right now, I want to ask you, if you've enjoyed this video, to hit the like button, subscribe, and tell me in the comments below how this is affecting you and what you plan to do to save money, save gas, etc. All of the subscribers and all of the interaction we have in the comments really helps YouTube know that what we're doing is producing valuable content, and it'll show it to more people and it'll help us grow. So thank you for watching, and stay safe.